Have you ever wanted to make money in real estate but just didn't know where to start? I can tell you firsthand that real estate investing should not be like chasing some shiny object because you are not going to make money overnight. Yep, you heard it here first. You're not making money overnight, but you probably will make a lot more money than most other businesses or investment classes. Hi, my name is Jason Balin from Hard Money Bankers. If you don't know me, or Ian Horowitz from Equity Warehouse. Although we both run separate investing businesses, we both have a lot of overlap. We want to share with you some of our experiences along the way. We both have been investing for over a decade, and we've both invested in lots of different asset classes along the way. There's lots of niches inside real estate. You hear the word real estate investing, what do you think? Flipping houses, buying and rent a property, things like that. Listen, you can invest in private notes. You can invest in commercial properties. You can invest in land, own rentals, flip houses, do subject twos. There's dozens and dozens of ways to invest in real estate, but it really depends on who you are, what your situation is, what your kind of end goals are, and things like that. So we're going to go through some ways to make money in real estate. So let's start off with what asset class somebody wants to buy, right? That's probably a good spot because everyone just wants to dive in and not really know what to do. It's pretty simple, right? You need money, you need deals, and you need knowledge. It doesn't have to be your own money. Someone else can help you find the deals. And yes, you probably have to learn the knowledge yourself. But those are the three things in order to qualify to make money in real estate. Let's dive in a little bit to what asset type you want to buy with first.
Yeah, so there's definitely broad strokes that you want to look at. So first thing you want to decide is, do you want to be a lender, or do you want to be an operator of real estate, or do you just want to be a what they call like a limited partner, an LP, an equity partner? So once you figure out those things, then you can go and break it down even just a little bit further. From there, you can decide with yourself, and we're going to get into this in a second, is do you want to be in single family real estate? Do you want to be in commercial real estate? So then you got those two branches. And after that, then there's so many more asset classes. Watch how many times I can break this down. From single family real estate, we have rentals, we have flips, we have wholesaling, we have Airbnbs, we have midterm rentals. We have you could even do different types of halfway houses. There's so many different ways just to do that one asset class of single family. Not to mention you could be a lender or an equity partner on that. Then when you look at commercial real estate, I mean, it just gets super, super wide. I mean, you got self-storage, which we're involved in, multifamily, which we're involved in, office and industrial, which we're involved in, mixed use, ground up development, hotels, outside storage. There's so many different things that you can get involved in. So when we're looking at asset classes, what we want to do is we want to define what we think is the best fit for our team and our skill sets and our ability to what we want to risk financially. And that's what we're willing to buy. And I think that's something that you need to look up at front and really clearly define who you are, what resources you have available, and what you want to invest in.
And although I don't think you 100% have to follow the way that we've all done it, I heard from a wise man a long time ago that you buy the best asset for your situation that you can afford, that you can execute on in real time, and then you upgrade those assets to better assets over and over and over and over. And I believe Ian and I probably have both done that between the loans that I was comfortable lending on, or the single families that he starting with, right? He started with a single family with very little dollars out of pocket because that's what he could afford, and he was comfortable doing that. And in essence, he was trading a lot of time for money because he didn't have a lot of money as a substitute at that time. And then, fast forward years down the road, he's not messing with $100,000 single family house anymore. He's only messing with 100,000 square foot commercial building moving forward, right? Because that's just the way it goes. You got to start somewhere. That's not to say that you can't start big from the beginning. We know lots of real estate investors that have started big from the beginning, but I think it's more reasonable to start at an asset class that's easier to understand AKA wholesaling a single family house or flipping a single family house or buying a single family rental. And then you're working your way into something a little bit more sophisticated and a little bit bigger. And that leads us to, what resources do you have, right? If you don't have any of your own money, it is going to be challenging to buy $1 million building. Can it be done? Sure. You can potentially get private lenders and seller financing and things like that. You can get creative to do all those things. It's just going to make it more challenging. So figure out what your resources are. Typically, it's time or money. Those are two of the biggest resources. There's others, right? And if you're coming into this business with lots of money but little time, that's great too, right? Because you can just buy some properties in cash. We're going to talk about how to find some of these properties here in a second, but you can buy properties in cash, put a property manager in on them, and have them as rental properties, right? They might not perform outstanding without you being an owner operator, but like there's a way to do that. You could use that cash and you could invest in passive loans. You could use that cash and invest in limited partnerships in commercial buildings or joint venture on people. On the other side, if you don't have much of your own cash but you do have a lot of time, you can network with people. You can go to meetup groups. It's a great way to do it. You can learn the game. You can, in essence, be the operator and the executor for the person that does have cash, right? You see how I did that? You marry the two together. This person has cash. This person has time. Marry it together. Do some sort of profit split.
Yeah. And when we talk about resources, a lot of people think it's just financial resources. And a lot of the time, that is what it is. It is a financial resource game. But as Jason just described, there's many ways to overcome the financial resource issues in the game of real estate. We've done it. We started with our own capital, and now we've raised over $20 million from our capital investors, and we do commercial deals on an everyday basis. What other resources do you need to think about? You need to think about your resource list of time. How much time do you have to dedicate to this business? This goes back to the asset class that you're investing in. If you have a demanding W-2 job, you might not be able to be an operator of real estate. You might be better served as a potential side-by-side investor or a lender on a deal versus being the main operator of that property. Other resources you need to consider: who's your contractors, who's your property management team, who's your leasing agents. There's many resources that go into this business besides just the capital. A lot of people get hung up on the capital because it's the biggest hurdle that they usually need to overcome, whether it's $10,000 for a down payment on a single family house, or it's $1 million down payment on a commercial asset. Everybody gets hung up there. But there are many other things that you need to consider when you're looking at investing in real estate and what resources you need to have available to you. And over time, that list will continue to grow and your network will continue to grow, allowing you to do more and potentially bigger deals.
Here's a bold promise. If you have a good deal, you will get it financed or you will get it flipped to another investor that will pay you cash for it. Finding a good deal is literally the most important thing to do. And it may be the hardest, right? There's an argument. Some people are great at sniffing out good deals. Some people aren't. But like, you're going to have to put in heavy lifting and and treat this as a business if you're really going to go find bargain basement deals. You can do it the easy way or the hard way. The easy way, you're not going to make as much money. And, in essence, jumping on multiple listing or chatting with a few wholesalers or chatting with a few real estate agents in order to find you a deal in a good real estate market where properties are appreciating, you can probably find a deal on there and scrape out a few bucks. But in a market that it's not a great market, where there's more competition, you're not going to find a deal like that, right? So that's a short-lived business model of finding a deal. Everybody who isn't savvy as real estate investors thinks you can just go on Zillow or go to MLS and find a property. Mostly residential stuff, commercial stuff. There's not as more of a elaborate MLS. You're more dealing with commercial brokers to do that. But the real estate investors, the ones that do this for a living, they're doing significantly more strategies, mostly direct to consumer, direct to sellers, direct to property owners. Have you ever seen, we buy houses signs, bandit signs all over your neighborhood? Have you ever seen we buy houses television commercials or direct mail pieces or text messages or things like that? There's not one right or wrong way. It's everything. Door knocking, putting on, doing direct mail, doing calls, networking with individuals, going to events, Working with wholesalers, networking with real estate investors, looking on MLS. I mean, there's endless strategies and ways to do that. And obviously the goal over time is to do them all, but don't get, don't get anxious or don't have anxiety over that at the begin with. Don't be overwhelmed. Start small. Start with something you can do. If you don't have a budget, you can't do direct mail. Direct mail is a phenomenal source, but if you don't have a budget, you don't have any money to start with, you're not gonna be able to do direct mail. That's okay. You might have to do more boots on the ground, heavy lifting stuff, and that's fine. There's nothing wrong with that as well. But all of these points tie in together. Figure out what resources you have to figure out what your action plan is to do so. If you don't have any money, you're going to have to network with real estate agents. You're going to have to go to every, meetup group in town to see what's up. Potentially, you could canvas an area and door knock and maybe just put some inexpensive flyers on people's doors. It's a great way to do so. Network with other people that you're just gonna have to do more manual boots on the ground stuff if you don't want to spend any money on this.
Yeah. And for us, finding the deal is probably the most important and challenging thing there is. You could presumably in 2013 and 14, when we first got started, go on MLS, find a deal. The market was trending up and to the right. We could screw up what we bought and we would continue to make money just because the market was improving every day. It was didn't make enough money. Wait 30 days, it'll be worth more. We can't do that. We're recording this in 2023, potentially on the backside of the height of the market, and things are starting to retract. So the deals get tougher and tougher to find because we want to make sure that we're able to make money. Now, just like Jason was talking about, there's many ways we market all over the place for deals. We do off-market direct mail. We do contact with brokers, building relationships with brokers. That's my favorite resource list because I cultivate that relationship one time and it continues to grow over time. And as we do deals, the broker starts to feed us deals because we're top of mind all the time. I call brokers all the time, debt brokers, real estate brokers, commercial brokers. Hey man, what do you got going on? Hey man, what do you got going on? Just call to say hi, staying top of mind. Another thing that you'll find is you got deeper into real estate, and some personalities lend to do this earlier on, is getting on a podcast and just talking, doing exactly what we're doing. People say all the time, hey, why do you do this? You guys don't sell anything. You're right. We don't sell anything because you know what? When we do these, I always have a broker that reaches out. I have an investor that reaches out that says, hey, I saw your show. I'm interested, or you have any interest in buying any deals that we have. I just did a show on a friend of mine's the other day. And guess what? It turned into a broker sending me a bunch of leads of deals that I've never seen before. So what is that? If you look at some of the marketing guys, at first you're going to go to the meetups, right? Or you're going to do whatever you got to do. You're doing one-on-one contact. And then eventually what you want to do is you want to get up in front of that room and speak to the whole room because now you're doing one-to-many, right? And then eventually you're going to want to have your own room and be able to talk to one-to-many. Many of you guys are watching this, and then all of a sudden you're going to see all of our reels and all of our other content. Again, that stays top of mind because my number one lead source is following up with brokers and staying top of mind. And even just having other people saying, hey, I'm interested in investing, or hey, I saw this deal. I saw this storage facility in my backyard and I don't think I can buy it, but I think it's a great fit for you. People start thinking about you all the time. So finding deals is more than just jumping on MLS or creating the best lead sources. It's a culmination of all of it and having tools in your toolbox to continue to grow your portfolio.
So financing options when you've been in this business for a long period of time is actually pretty easy, but I understand that it's a little bit daunting when you start out in this business. How am I going to get money? How am I going to get approved? Where do I go get a loan? How do I qualify? Things like that. But going back to our previous topic related to finding a good deal, if you have a good deal, you will get money for it, right? A bank will want to finance you. A hard money lender will want to finance you. A private lender will want to finance you. Somebody will want to partner with you to do a joint venture with you. It might not be the exact terms that you want, but at the same time, like you'll be able to get this thing done. Financing options. You can use a bank, right? Pros and cons. Cheaper terms, more pain in the neck paperwork. Hard money lender, a little bit more expensive, but a heck of a lot easier to deal with. private lender. Cheaper terms. You, in essence, can make the terms that you want with that private lender. The hard part is you have to go find a private lender and build a relationship with them. Home equity line of credit on your house. If you have that, that's great. If you have your own cash, that's great. Doing a JV partnership with somebody. Like, there's a lot of different ways to finance it. And the best real estate investors that we know use all of them. They use a bank when they have enough time on a deal. They use a hard money lender when it's a quick close. They use a private lender, but then, eventually that private lender might run out of cash. They use seller financing if the deal allows for it. They do subject to, which is another, which in essence, like, they might not even need any cash out of pocket because they're buying the property subject to the existing financing. So don't be overwhelmed with financing options. There's lots and lots of options in order to do so, and familiarize yourself with all of them, and start from the beginning. Ian, why don't you jump in on disposition a little bit?
Yeah, so disposition, and you guys might say, well, why does this matter? And if you haven't noticed all the way through this conversation, each of us have brought up points, and we always go back to tools in a toolbox. And I was a fireman for the city of Baltimore for 15 years, and we were trained in a multitude of different specialties. And our core essential job is to go put fires out. But hey, someone got stuck in a piece of machinery, or a car accident, or someone needed CPR. We had tools in the toolbox to continue what we needed to do. So for us, when we're looking at dispositions, we're looking at multiple exit strategies, having multiple plan A's, plan B's, plan C's, plan D's, tools in the toolboxes to get through this deal. And we're looking at the disposition tab when we're looking at the acquisition tab, because you don't make your money on the disposition, you make your money on the acquisition. And well, it might be hard to predict the future because none of us can tell. If we had a crystal ball, I would invite all of you to our beautiful private island, and I would fly you privately to come down and visit us. But none of us have a crystal ball. But what we can do is we can take very calculated risks and assumptions based on what we see in the marketplace to be able to decide what this disposition looks like. And it's not just a sale of property. It is a redevelopment of property. It's a lease of property. It's how many rentals are you going to get because you're running a self-storage facility? How long is it going to take you to lease a commercial site? I'm doing single-family rental houses, so I'm looking at what subsidized rents are versus market rents. I'm doing Airbnb. Do I want to do Airbnb? Do I want to do VRBO? Do I want to do all of them? Do I want to do midterm rentals? What's it going to cost me to build this out? The disposition relates to every other facet that we've talked about here all the way through this process. And you'll notice as we continue to talk about these things and we do more videos on these, you're going to hear a lot of the same things over and over and over again. It's not because we're that simple-minded. That's what it takes to get these deals done. If you want to get to the disposition, you need to do all these functions to have a successful disposition. And that's when you collect your money, not when you make your money. You make your money on the acquisition. You collect your money at the disposition.
We appreciate you following this channel and spending the last few minutes with us. If you were able to get any value, we'd certainly appreciate a like, a thumbs up, a share. That's super appreciative. That's all we can ask for. We don't sell anything. We have nothing to sell. All we want to do is create solid content to help real estate investors grow their portfolios on the residential side and their commercial side. And we would be forever grateful if you were even able to tell one of your other real estate friends or buddies or colleagues about this channel. Thanks so much. And we will keep the good content rolling.